Watch this video to learn and study the exact strategy I use to maximize profits on a winning trade. In trading, it doesn't really matter how much you lose when you're wrong, but how much you make when you're right. Let's move on to the chart.
Explanation, I won't be using this setup, so this is just my charts. This is one of the pairs I trade. As you know, I trade currency pairs, and the two pairs I trade is JVP USD and Euro JPY. I recently brought Euro JPY into my trading system this 2025 because of the way the pair moves. It moves magnificent. The pair moves really nice. You can see I take some losses too, so I try to be very transparent, but nonetheless you can see how the particular setup, you can see I even get some break-even trades and whatnot. So the particular setup, I won't be using this one because this one was like a lot of pips. This was over 170 pips. The particular example I'll be using to explain how to maximize trade on a winning position is this particular setup. But let's move on to this because this particular move was just a 50 pip move. It was just a 50 pip. But let's move on to the other charts. I just have some other pairs here which I look out for because of my mentees. But let's see here. This is a particular one I'll be using for the example today. So yeah, so I just want to do it on a different chart so we can get to like refresh and start again. So I just want to explain first why I got in on this trade. I want to explain why I got in on this trade. Then I'll be explaining how to maximize trades on this particular setup, how I maximize this particular setup. So let me just get clean this whole thing and just get clean them off, and let's begin. Let me get clean this off. So the first thing I saw was we have this trend line coming from the 1 hour time frame, and on our video I'll explain how to plot trend lines and how to use this strategy very well. So we have this trend line coming from here, and if we zoom out a bit, let me make this. If we zoom out a bit, let's go to the 4 hour time frame. Let's go to the 4 hour time frame. So I just want to use this to explain this setup. So from the 4 hour time frame, yeah, we can notice that our price pushed down, pulled up, but created a lower low, yeah, and price what had pushed down, which is price is just reacting to this zone here on the 4 hour, bouncing off this level, down here, pulled up again, created a lower low here. So now we have this trend line coming from here, but nonetheless the main trend line we're looking at is this one now, because now we have a first touch here, we have a second touch here. So I was expecting a third touch here to bounce off here before a proper break. So I was expecting a third touch from here before a proper break. So let's just move on to the 1 hour time frame. So the first thing we're seeing as our confluence is let me just put this out here so you guys can just easily follow this confluence. One trend line. The first confluence is the trend line. Just don't mind my typos. So the first confluence is the trend line. Now even on the 1 hour, which was on the 1 hour, I had to like draw the trend line because it's clearer on the 1 hour. So you can see the first touch here, all this classifies as the first touch. This is just like a rebound. The first touch here, the second touch, and I was expecting the third touch here. So now let's see what happened when price got to the second touch. Let's just see price movement. Join me. So we had what? Here we have price giving like a W pattern, which is nice. This good signal for our buys, but I'll explain the strategy in another video. That's not what we're here to do. So now price forming higher high, higher low, higher high here, a higher low here. Now see this weak rejection. Notice how price pulled up and rejected down. One forming what? A lower low. Now see how price, let me zoom in carefully. I want you to see how price broke structure. So I just want to use this to explain. So when we move to the main chart, you'll be able to understand. Notice how this was the most recent low. Yeah, price took it out. Yeah, that's creating a lower low here. Pulled up, created a lower high. Notice how this high is lower than this high. You could say a lower high or an equal high. And notice this weak rejection. See how price pulled up and pulled down. So from here, what happened next again? price came down to what? Break what? This recent low. Notice how this one was broken by this, and after I pull back, this particular candle too was broken. So most time what I do is when I see a strong bearish candle on a zone, when I say strong bearish candle on the zone and structure is being broken, that's market structure, I wait for 50% retracement of that candle, then I go in. Like if I was going on this particular setup, noting that, okay, spotting that this first structure here was broken, price pulled up, yeah, I'll still be watching because now price can do something like this, coming down, tapping here, coming down, breaking here, and just continue, just give it like a continuation pattern. So I would wait. Then once the structure is broken, I'll wait for 50% retracement of that candle. 50% retracement, I always talk about this, is 50% of the body of this candle. Let's say this candle is 50 pips. Yeah, I'll wait for this candle to retrace 25 pips. Wait for the next candle or whichever candle to come and retrace 25 pips. It just gives me sniper entries most times. I've seen that it works a lot, so I just tend to stick with it. So from here, I would have taken 50% retracement of this candle. That's half of the body of this candle should be around here, which you'd have seen, so that have given me a nice good entry. And I'll just place my stop loss. I like using really good SL just below the previous high, around here, or perfect around this weekend. We'll write this down, but I'm not here to explain strategy. I just want you guys to at least get a bit of what I'm gonna do next, or how I got the same trade, because it's the same strategy. So first, where are our confluences? Where did we write that? So yeah, let's bring it closer. So based on what I've explained there. So over here, first we have what? The trend line. Next we have what? There's a psychology level around the zone, which is 1 to 162.000. I'll get to explain the full strategy video, and the course is out. The full course is out explaining these things in full details with a lot of secrets there. So I'm not going to explain much. Psych level, didn't teach you how to draw the psych levels and all this thing perfectly. So too, we have the psych level, and the psych level falls within the zone. It's not a level, it's not just a line, it's a zone. So being out, you can see this weak rejection here, this place here. So that's the zone we marked out, because now anything that would make price, when price go here, yeah, so let's say price go here for me, well, higher high, then higher low. Now anything that makes price here push up above this level, yeah, could be a breakout from here, and price could come back to retest here. That's this point here, this point. Notice how price came here, pushed up, came there, broke it. So we have a level there. Let me just use it, and we'll have a push up. So we have a level here. So this is a level. We have a level here on the 1 hour. So anything that makes price break here from this particular point, we may have a retest and price is going up. So which means the sell here won't be valid. So that's why we have the zone here. So we're expecting to see how price will react here. But nonetheless, let's see what happened. So price pull down here, higher high, a higher low, higher high, obviously higher low. Now see this, lower low, a higher low. You can see lower low, higher low. So price hasn't given us a pure testing yet. And now what? This slightly higher low, then what? Price what? Let me take this out to show you. Let's draw our lines. Now from this point, you notice that price is respecting this level here. Price is respecting this level here. And what I'm looking out for is for price to tap into the zone and give me a strong bearish confirmation that it wants to sell. But nonetheless, we look for, as day traders, we look for our entries on the lower time frame. And as I told you guys, I'm looking for a strong bearish candle. Now, this candle is good. Compared to, I'm looking for a candle that would take out, that would show that there's a bearish presence here. Like this, show there's a bearish presence. This week here, it shows that there was a bearish presence coming around here. And something like that, that's what I'm looking for around here. Which candle? This candle gave it in. This candle opening from here, pushing all the way up, then closing this bearish. It gave it that the bears are here. and being that we're not expecting price to take out this place, so that was a good confirmation. So let's move down to the lower time frame. Oh no, the 15 minutes, which is our entry time frame, because I'm a day trader. Let's move down to the 15 minutes. So in the 15 minutes, perfect. Now in the 15 minutes, you'd see what I'm talking about clearly here. In the 15 minutes, you would notice, yeah, you notice, where's our confluence? So you notice price forming higher highs and higher low, lower highs and lower low. Then here you notice this indecision, then a pull up. Now at this point, this is why it's not good to rush into a trade like around here. You're already selling or whatnot, because our price got to your zone, you're already selling. Because now see what happened here. With this pull up here, price could have continued going up. But as far as price respected this level, I feel we are still good for the sales. Only when price doesn't respect this level and takes it out, that's when we're good. We're going to be looking for buys. But for now, with this strong bearish presence, you can see this particular candle, this strong bearish candle. Let me zoom out. This strong bearish candle. So the next confluence is, let's put 3. We have what? That's the zone which we're expecting, which I'll just call market structure. Market structure. And the fourth one, our fourth confluence, is candlestick pattern or candlestick behavior. Anyone, candlestick pattern, candlestick behavior, it's all the same. So based on this, you can see how this candle is very bearish. And what did I say? Strong bearish candle, 50% retracement. Is that clear? Is that clear? So from that, all I had to do is to wait for the 50% retracement of this candle. 50% body of the candle, half of the body of the candle is around here. All I had to do was to place a stop loss just above that zone, which we're expecting price to not get to. Let me zoom out a bit. Yeah, and our TP was just this line, just something, not something much. So since price has created this strong bearish candle, and on the 1 hour we have a good close, yeah, all I'm just waiting for, I don't expect price to even come back up here. I don't expect price to come back up here. So that's why the stop loss is tight here. It's good here. So for a stop loss being here, now we could have easily held this market all the way down like this. But then, that's what I was talking about. This particular move, you can see total pips of about 59 pips, thereabout. But it should give me 50 pips, because I think I call 50 pips thereabout, about 50 something pips thereabout. So just something around there, sure. Something around there. Then my entry was like here. That's just my entry was like here, and my stop loss was just above this week here. So something like that. So, sorry. So having that in mind, we're in now on the trade. What should we do? We could wait for market to play out. So market came down, pulled down below, came back to retest our entry. So what I'm talking about is maximizing your trades on a winning position. Like I already mentioned, this price has closed very bearish on the 1 hour time frame. The 1 hour has shown us that this market is going to sell. Price is respecting this trend line. Price has respected this psychology zone. Price has given us a market structure and a candlestick pattern that is aligning for a sell. At least price should sell to this 4 hour zone that price has been rejecting from before a breakout. Now, having that in mind, what do? Price pull down. When price pulled up to this point, all we'll do once price pull down here, because you have to learn how to manage your trade. These are what I teach, and these are what I teach my mentees. Knowing how to manage your trades. When price pull down here, when price is around here, after we've gotten in on this trade, we'll be waiting, because now this candle would have been bullish. We'll be waiting for price to take out this low, because in a downtrend, price takes out the lower lows. Price takes out lower lows in a downtrend. So we're waiting for price to take out this low. That's to break out of this place. So once price has broken out, we'll be sure that okay, now at least we're in good profit and we're on the right direction in the markets. But nonetheless, we'll still be waiting. We'll not break even yet. break even means when you move your stop loss to your entry point. We won't, because price is just, the price here hasn't given us 1:2 or 1:1.5. Should be around here. It's not even up to a 1:1, you can see. So there's no need to even break even. But nonetheless, when price pushes up here, let me zoom out. Now this is where the trick comes in. So this is where the trick comes in. So price pushes up here. Yeah, let me take this out. Price pushes up here, gives this formation here. Now you may be thinking, should you start buying? Will price start buying based on the formation? No, because why? You have the zone to guide you. That's all these things. That's why it's good to mark levels. You need to manage your trades. While managing your trade, that's when you maximize. Now this closes like this. This closes like this. You have your stop loss in place in case of anything. The moment this bearish candle prints, this particular bearish candle prints, it shows you we're about to now go for sales. This bearish candle prints shows you the sellers are here again. So now all you need to do is the same thing, wait for 50% retracement of the body of this candle, which should have been somewhere around here. Now waiting for the 50% retracement, let me bring it down, which is somewhere around here. Notice once I go in on the trade, price was there pushing up. I'm not scared, because now at this point I'll have my stop loss around here. Being that not just my stop loss for this new entry, but my stop loss for this one too would reduce to here. So you can see I'm just still risking about the same thing based on the lot size I'll use here. I'm still risking about the same thing. So what I'm expecting is that price should not take out this place, because if price takes here out, it should come retest and it should go up. So that's why I got in here. And from this point here, all I did was having my stop loss. I just wanted my stop loss to be above this week. So just somewhere around here, anywhere around here was fine for me, because this was the week I was looking at. Because even if price flashes up, you shouldn't take out this week here, because now around here you can see, if you want to point from a 15 minutes point, we have like a small zone here. You can see we have this small zone, so price should not take out this place. So that's why I go in here and price pull, then we have a nice seller. Now notice the same thing, structure break we had here. Remember when I explained using the other point, explaining lower lows, lower highs, lower lows, lower high. Now over here too, we have another one which price had created this recent low here. Since we've not gotten to our TP, we can easily maximize our trades. So when price was here, we have this flash down here, which means price had broken this structure here, which is good. All I had to do is 50% retracement of the body of this candle, which was around here. 50% retracement, which I go in here, and my stop loss just needed to be above that candle that broke out. Just above this candle that broke out, which was this one. Which was this candle. My stop loss just needed to be above that zone. It's still the same thing, it's just the zone. This is the zone here. My stop loss just needs to be above that zone. Now my stop loss for this particular one, break even, this one already in profits. So you can see all the stop loss being here. You can see that even if price comes in and takes me out, I'm already in good profit. I will be making at least 1:1. 1:1 of this initial position based on this entry here. So now all I have to do from here was to ride the market all the way down to here. Let me adjust this. And now let's see, from a 50 pip move, let's see how many pips we're able to catch. This particular one was a 50. Let's use the initial this thing from the other place. Let's get the exact amount of pips I caught, because I can't fix the exact points. So this was the initial this thing. So let's see. So here we got 50 pips move. 50 pips, 50 plus. Then the next point we got, let me just adjust this. The next point here we got what? 44 pips. So 50 plus 44, that's 94 pips. And here we have a 25 pips. So 50 plus 44, that's 94 plus 25, that's 119 pips. 119 pips. So let's say if I was risking, let's say if I was using 0.1, the least 0.1 on this setup here, and risking $26, instead of making $50, I would end up making, that was 94 plus 25. I'll end up making $119. That's $26. That would have been $26. Let's write that out. That would have been $26. $26 to make what? Would have been making what? $119. $119. So this over, now instead of making just a 1:2, you can see that we'll be making over 1:4.5. Over 1:4.5 just on this setup, just on this small trade. On this 50 pip move, we're making 1:4.5. That's crazy. This particular trade, if you're risking 2% of your perp firm here and you maximize nicely, you'll be able to pass your perp firm account, your stage 1 or phase 2, your 8% phase, or the, what's it called, 10% phase, just maximizing position on just one trade. These are the certain things I teach to my mentees, and these are the things that the course contains. These are the things that are in depth, but I broke them down in full pace. These things are in the course, and the cost is going for a very, very minute price. To get the info for the pre-order, do well to use the link in the description to get my Instagram handle and send me a message.
Alright guys, I believe you've been able to see how I can easily maximize a 50 pip move into 150 or 200 pip move easily. And I teach this to my one-on-one mentees, those who subscribe for the one-on-one mentorship. Remember, the one-on-one mentorship recently started this April. So for those that will be subscribing for this package, they are the ones that will be getting this premium knowledge and a lot more. So for those that want to have a one-on-one section with me, a free one-on-one section, do also use the link in the description to set up a meeting, and we'll have that during the week. And for those that would love to join my free Telegram channel where I share free signals every single day, do well to use the link in the description. If you want to keep up with me on my Instagram, use the link in the description. And if you want to subscribe for the one-on-one mentorship, do well to send me a message on Instagram stating one-on-one, and full details will be sent to you. The recommended broker still remains Xmas. Smash the like button, subscribe to the video, turn on that notification bell for more contents like this. I remain my humble self, Elvisbillman, aka the real estate trader. You know the vibes, guys. Peace.